5 a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. U.S. stocks hitting record highs ahead of big tech earnings. ASML results giving an early boost to the market on AI demand. The dollar just stabilizing a bit now after its worst performance in 4 years. President Trump brushing off sell-off woes, fueling speculation of a longer-term decline. And it is Fed Day. Chair Powell sure to get questions about the future of the Fed as traders price in a more dovish policy shift under new leadership. So let's take a look at these markets. I'm smiling because we are in the green. We've had 2 straight days of gains, and then ASML orders came in, just blew things out of the water. It is the last time we'll get the quarterly orders from ASML, but it's certainly giving the AI trade a boost here. Yesterday, the Nasdaq 100 was up almost 0.9%. It looks like it's headed in that direction again. There is always the possibility that the Federal Reserve derails all of this, of course. Let's take a look at the bond universe. It's not likely to happen. None of the economists in our survey are looking for any change in rates. Paul Donovan of UBS this morning, though, saying there could be the possibility of an insurance cut just to give people the sense that they shouldn't be afraid of unemployment, for example, and that they can still dip into their savings in order to pay for those tariffs. But he doesn't really expect one this time either. So as you can see, no change at the back end, and we are actually a little lower at the front end, 357 now, but really unchanged. Let's take a look at precious metals and so on, because we have gold soaring above $5,200 an ounce again today. We've almost met the Goldman Sachs year-end target of $5,400. We're very close to $5,300 on gold. Nat gas coming off a little bit. We'll be very much watching the dollar. It's rebounding ever so slightly as an index, up about 0.2%, but it weakened yesterday after Donald Trump's comments by more than 1% against a basket of currencies almost instantly. It was something to see. All right, let's get to some individual market movers now this Fed Day. Over to London and Chloe Melly.
Good morning, Bonnie. Texas Instruments is up more than 7% this morning after a surprisingly positive outlook from the company. This will be taken as a sign that industrial and automotive customers are increasingly buying again, investing again after clearing off inventory. And given that Texas Instruments is often seen as a barometer for the health of the wider economy, this points quite positively. Moving on to Seagate, which is also in the green today in pre-market trading after reporting earnings ahead of expectations and issuing quite an upbeat outlook. And that was thanks to strong demand for data center equipment. This is part of that broader rally and momentum in memory and storage stocks, and we are up more than 10%. And finally, it's a busy earnings day today, so let's look at the slate of today. We are mostly green across the screen there for Microsoft, Tesla and Lam Research, and Meta Platforms a little bit weaker ahead of those earnings. Lam benefiting probably as well from those great ASML numbers that we got out of Amsterdam today.
Yeah, for sure. And it is the busiest day for S&P earnings, Chloe. You have almost $9 trillion of market cap reporting today. That's Chloe Melly there in London. And coming up in this hour, we're going to count you down to the Fed with Andrew Hollenhorst of Citi. Tech driving stocks higher than ahead of big earnings. ASML kicking things off with orders hitting a record on AI demand.
The last 3 months have brought a lot of clarity. And I think what you see basically is that the semi-industry, our customers, start to believe that this AI demand is sustainable, and therefore they have moved into building capacity, and they are moving very aggressively. And I think this has been very nicely translated indeed into a record booking number. So that's, of course, very good news for the midterm.
Joining us now from Amsterdam is Bloomberg's Charlotte Hughes-Morgan. So, Charlotte, what are your takeaways from the earnings? Just give us the big picture first off.
Thanks, Bonnie. I mean, as you said, absolute record quarter for ASML. So that bookings number, which has been the closely watched metric up to this point, 13.2 billion euros, absolutely surpassing any of the expectations we saw coming into this quarter. And what's behind that? Well, you heard the CEO there mention it. It's the unabated demand for artificial intelligence. So let's remember, ASML is the only company that is capable of producing the cutting-edge lithography machines that make the most sophisticated chips that power artificial intelligence applications. So what the CEO is saying is the last few months, our customers, and those are the all the major chip makers, TSMC, Samsung, Intel, they have become much more positive about the medium-term market perspective on artificial intelligence. I mean, if you look over the last few months, a year, we've seen billions of dollars pouring into data centers and other artificial intelligence infrastructure. That prompts chip makers to ramp up their capacity. So they're really doubling down and investing in CapEx and spending a lot more. And that translates into really strong orders for ASML. And, they've said they expect this to grow. They expect AI demand to be sustainable. They gave outlook for 2026 that, again, surpassed estimates that we had already.
Well, this is about the most transparency we'll have anymore from ASML because, as we've been saying, we don't get those quarterly numbers anymore. What we do know is that there's layoffs coming. So 1,700 jobs, about 4% of the workforce. Does that portend anything a little worrying, given that, it wouldn't seem like a time when ASML would need to lay off workers?
Well, it's interesting, yes. As you said, at 8:30 this morning, Citi, ASML released a statement saying that they plan to cut those 1,700 jobs. And the market doesn't seem to be too spooked by this. And I think the explanation that ASML has given is that these job cuts, which will mainly take place in the Netherlands, also a few in the US, are mainly happening at the management level. And the aim is to be more efficient, so to streamline their technology and their IT divisions and let engineers be engineers, so to speak. So it seems to be that they are trimming some of the kind of more managerial layers rather than making kind of big cuts to the way they carry out their kind of engineering processes.
All right, Charlotte, thank you so much. That is Charlotte Hughes-Morgan in Amsterdam covering ASML, the bellwether for the AI trade and the quarter. Meanwhile, the dollar stabilizing after its biggest drop since April on the back of President Trump saying he's not concerned about a weaker dollar. For more, Bloomberg's Ven Ram joins us now. Then, should he be given that as soon as he made that comment, the dollar index moved 1.2%. We saw stronger sterling, stronger euro, stronger yen, all off the back of that one comment.
Absolutely, Vonnie. I think that, it's clear what the U.S. policy administration wants here. They want strong U.S. stocks. They want treasuries to be steady, but they do want a weaker currency. They want a weaker currency to close the deficits. They want a weaker currency to boost exports. But it's not as simple a prescription as Trump would have it, because over on the other side of the Atlantic, we heard from the ECB this morning, and they are saying that, look, if the euro continues to appreciate, it's going to pose a headache for them, because that will mean that imported inflation into Europe is somewhat subdued relative to their projections. And what that implies is that they will have to lower the policy rate further. So, you've got the ECB, which doesn't want a strong currency. You've got the US policy administration, which doesn't want a stronger dollar. So who is going to inherit a weak currency? Nobody. Who is going to inherit a strong currency? I beg your pardon. So I think that, this is all going to be like a currency war over the next 6 months. We already know what's happening with the yen and the yuan. So it's going to be a heady mix for the currency markets in the next 6 months, Vonnie.
Speaking of currency markets, slightly obliquely, but gold almost hitting a record. I mean, it is hitting a record, but almost hitting $5,300. And we're hearing that Tether, weirdly enough, is amassing a stockpile of gold bullion as well. Should we see that as the reverse, the mirror image of the dollar trade, or is something else, then?
Well, gold has got its own momentum, and I think that the weakness in the dollar is going to feed into it. Because I think that, with Trump's comments, it's clear how the policy administration views the currency, and therefore the currency markets are likely to hedge against corporates are likely to hedge their dollar exposure. That means that, dollar is likely to be on the back foot here for the next 3 months, at least a quarter or so. And I think that, that in turn means that the gold is going to continue to find the momentum that it already has. So it's going to be a, pretty uncomfortable scenario for many people with a weaker dollar and a stronger gold.
Then you've been pointing out something interesting, which is that given how, quote unquote, overvalued, I guess it's one word for it, US stocks are, and stocks around the world in many ways, that there's one market where, you might see relative value, the cleanest dirty shirt in the room, if you like, and it's not the US anymore, it's actually the United Kingdom. Explain your thinking.
Absolutely. I mean, you know, people don't associate UK stocks with excitement, at least as much as they do with the US stocks. But that's missing the point. The point is that, you know, UK stocks, if you look at the past 25 years, Bonnie, they have returned in terms of earnings growth, they have returned as much as more than 8% compounded annual, which is not trailing too far behind the US. And also, if you look at the earnings yield, you're getting about a 6% earnings yield on UK stocks. That's the highest of any developed market that you can think of. And I ran a valuation exercise looking at UK stocks as long duration bonds. And what that shows is that the fair value of FTSE 100 is 11,400. So we are more than 1,000 points lower than that. So this is a market that is cheap, that is undervalued, and it doesn't have any AI exposure. That is actually an advantage, because when the investors think that, you know, they've had too much of the AI exposure and they're looking to hedge those returns away from AI exposure, what is the market that offers that non-AI exposure but steady growth in earnings? That's UK.
All right, we're going to be keeping an eye on the FTSE, just looking up to see how well it's performed so far this year. And it looks like it's higher as well, but not by as much as some stock markets. So the FTSE up 2.5% this year versus about 2% for the Nasdaq 100. We'll keep an eye on that throughout the year. Ven, thank you so much. Ven Ram there. Now to other top stories trending on the terminal this morning. SoftBank is in talks to invest as much as $30 billion more in Sam Altman's OpenAI. The Japanese company already one of the ChatGPT maker's biggest backers. Sources say the discussions are fluid and the amount of funding could change. Amazon employees learning of a new round of layoffs in an email apparently sent by mistake. The email from one of its senior VPs scheduled a meeting for Wednesday morning that has since been cancelled. The message referred to another message from HR about employees in the US, Canada and Costa Rica having been laid off. That other email does not appear to have been sent. Amazon has not responded to requests for comment. And LVMH sees a poor Christmas. Shares are sinking, the most since April, after it reported a wider than expected drop in fashion and leather goods organic sales for the fourth quarter. CEO Bernard Arnault said 2026 is unlikely to be straightforward and that LVMH would limit spending this year. Coming up, UK Prime Minister Keir Starmer touches down in Beijing. That's next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. UK Prime Minister Keir Starmer has landed in Beijing in the hopes of broadening ties with China while avoiding a flare-up with the United States. Joining us now is Bloomberg opinion columnist Rosa Prince. Rosa, what do we expect from Starmer's trip to Beijing?
Well, Keir Starmer has brought a big delegation with him. Lots of banks, lots of other big businesses, and also some cultural institutions. He's got the Royal Shakespeare Company along. And what is going on here in Britain is that the government is being criticised for low cost of living, poor growth, and he's hoping that if he can forge some deeper links with China, then he could do something about that.
He has to be very careful. He has to walk a tightrope, right? He doesn't want to rile President Trump. How does he do that?
There are lots of advantages to going to China, but there are also a lot of pitfalls. One of them, as you say, is the attitude of Donald Trump. Now, Trump was unhappy, obviously, at Mark Carney, the Canadian Prime Minister's trip to Beijing recently. I think he probably sees Starmer slightly differently. Obviously, it's not a close neighbour as Canada is, and he has a pretty good relationship with Keir Starmer. The numbers also are not huge. Domestically, there is also pressure on the Prime Minister here. There is criticism that China could get too involved in Britain's national infrastructure, that's a security risk, and also about the surveillance culture in Beijing. For example, the Prime Minister is bringing a burner phone with him and a completely blank laptop so that the Chinese cannot hack into his tech.
Right, I'm sure that will help substantially. Rosa, what could he come home with that would satisfy a domestic audience? I mean, he's obviously under pressure at home as well. He's gotten rid of the Andy Burnham threat for now, but that leaves other threats out there. He needs to come back with maybe some kind of trade deal, perhaps, or what would work?
I think he would like some trade deals. He'd also like to address that balance deficit that they have. China sends in a lot and doesn't take a great deal. I think some action on that would be very welcome. But again, there are risks. There is jeopardy here because what he doesn't want to do is flood the UK market with cheap Chinese imports. He doesn't want to risk putting too much Chinese tech into the national infrastructure. For example, he has actually just paused work on a wind farm here in the UK amid concerns about that. I think perhaps the biggest potential will be on EV, on those electric cars that are seen as a real growth area in the UK, and also on renewables, wind tech in particular. That's another area, of course, where he might offend the president, who has set himself in his Davos speech. He spoke very bluntly about how he doesn't think that this tech is real. So he has to be careful, but this is his happy place. He quite likes being on the international stage as opposed to back here in Westminster, where he's under so much pressure for his own leadership.
That's for sure, and we'll see if Xi Jinping wants anything from him as well in return. Rosa, thank you so much for joining. That is Rosa Prince of Bloomberg Opinion. Coming up, SpaceX weighing a June IPO. More on that, and a look at what else is making headlines in your front page news next. This is Bloomberg. This is Bloomberg Brief. I'm Vonnie Quinn in New York. The first Fed decision of the year coming later today. Take a listen to Goldman Sachs Vice Chairman and former Dallas Fed President Robert Kaplan, looking ahead with Bloomberg's Stephen Engel.
Right now is at neutral. What do I mean neutral? We're at 3.5, 3 3/4. The neutral rate is, I think, 3/4 to 1% real, and then add the inflation rate, 2 3/4. With inflation still running at 2 3/4 and the expectations of stronger GDP growth, which may help the job market, I don't think they want to move until they see demonstrable evidence that inflation is improving. If they see that this year, they'll move, but they don't want to act until they see it.
Is there disunity, though, among Fed participants? That was the concern. I talked to Patrick Harker, the former Philadelphia Fed president, who essentially said this causes problems. He was quite surprised in the last rate decision in December by that disunity.
I think there's debate and disagreement, and I think that's a good thing. And here's why. When we were at 4, 4 1/4, 4 1/4, 4 1/2, it was easier to go along with cuts to buy labor insurance because we were still the Fed was still restrictive. The reason the tensions got higher is once you're getting to neutral, I think a good part of the group said, I don't want to be at neutral with inflation sticky and, by the way, above target for the last 4 or 5 years. I think you'll see now that they've bought the insurance, I think you'll see a pretty good consensus among the group. We don't want to act until we see improvement.
And your views again on Fed independence? Obviously, there's been lots of ramping up of rhetoric coming, whether it's from the DOJ and having the subpoena. Jay Powell stood strong.
Yeah.
Of course, he's going to be handing off his position. He could stay on as governor, though. How do you think this plays out?
So let's take it in pieces. In December, a lot of people may not have paid attention to this. The governors voted unanimously to extend the term of all the bank presidents, other than Raphael Bostic, who's retiring. That might have surprised people. Unanimous vote, by the way. Okay, so I think there's more likelihood there'll be stability among the presidents. Then, if the Supreme Court does not allow action on Lisa Cook, you've got 4 seats with Jay Powell's the one that's up for grabs. I think he's likely, I would have thought, not to stay on. And so there'll be 4 seats with the new chair. It means the new chair will push regulatory reform, may have more collaboration with the Treasury on the balance sheet, but on the Fed funds rate, he's not going to have 7 votes wired. Yeah. He's going to have to persuade, debate, disagree. I think that's a good thing. He'll argue that the Fed should anticipate inflation improvement. The committee will want to see it, and that'll be the debate.
Bloomberg's Stephen Engel with Goldman Sachs Vice Chairman and former Dallas Fed President Robert Kaplan there. Now it's time for your front page news. First up, the Financial Times reporting Elon Musk has proposed timing SpaceX's IPO to coincide with a rare planetary alignment and his birthday. The FT says the rocket maker is targeting mid-June, when Jupiter and Venus will appear very close together for the first time in more than 3 years. SpaceX is looking to raise as much as $50 billion at a valuation of roughly $1.5 trillion. Next up on the New York Times, Representative Ilhan Omar attacked at a town hall in Minneapolis. A man in the front row rushed at her and sprayed her with a substance that smelled strongly of vinegar. The 55-year-old assailant was removed by security and booked into jail on suspicion of assault. Hours before, President Trump had criticized Omar at a rally in Iowa. And finally, the Washington Post is reporting an initial government review reveals 2 federal agents fired at Alex Pletty during Saturday's fatal shooting in Minneapolis. The statement was sent to some members of Congress by the Department of Homeland Security and provides the first official timeline of the deadly encounter. It makes no mention of Pletty brandishing a weapon. And those are your front page stories. Coming up, Andrew Hollenhorst on the Fed. This is Bloomberg. It's 5:30 a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. U.S. stocks hitting records ahead of big tech earnings. ASML results giving an early boost to the market on AI demand. The dollar, at least stabilizing, if not strengthening, after its worst performance in 4 years. President Trump brushing off sell-off woes, fueling speculation for a longer-term decline. And it's Fed Day. Chair Powell sure to get questions about the future of the Fed as traders price in a more dovish policy shift under new leadership. So we are seeing futures pointed higher after ASML came out with record orders, just boosting that AI bull trade. S&P futures pointing to a third day of gains, same for the Nasdaq 100, which, by the way, was up almost 0.9% yesterday. Bonds-wise, nothing happening there. Obviously, no one is expecting the Fed to cut rates today. All economists in our survey say they'll stand pat. Now, I want to mention some breaking news. Amazon will cut 16,000 jobs. That just being confirmed right now. Amazon uploaded the letter that was sent out in error yesterday evening, and it's confirming it's cutting about 16,000 jobs. It says that most U.S. employees will have 90 days to look for a new role, and it will continue hiring and investing in strategic areas. Remember, an email went out yesterday notifying employees that there would be a meeting Wednesday morning, and the email was titled Project Dawn. It was sent out in error. There was no comment from Amazon, but now we are actually getting confirmation that Amazon is cutting 16,000 jobs. It's going to give U.S. employees, or most of them, 90 days to look for a new role. All right, let's get to some individual movers. Here's Chloe Melly in London.
Good morning, Vonnie. Texas Instruments is up very strongly this morning after a very encouraging forecast from the company. And this is a company that is considered to be a barometer for the health of the wider economy. And so this upbeat forecast indicates that some industrial and automotive customers are increasingly recovering. And so this is quite positive. And we are up more than 7% this morning. Moving on to Seagate, which is also in the green after reporting earnings ahead of expectations and also quite an upbeat outlook. And that is thanks to strong demand for data center tools, and this is part of this broader rally that we've seen in storage and memory stocks. And finally, it's a very busy earnings day today, and so let's see how some of those names are faring ahead of their results. We have got Meta a little bit weaker, but Microsoft, Tesla and Lam Research all in the green this morning ahead of earnings. And Lam Research in particular is also benefiting from that read across from the ASML numbers, the very positive ASML numbers we got out of Amsterdam today.
Very positive indeed, absolutely sending bulls flying. Chloe Melly, thank you so much. The Fed then widely expected to hold rates this afternoon. Citi's Andrew Hollenhorst looking ahead to the rest of the year, writing, quote, the long-term trend continues to be toward gradually loosening labour markets and slowing inflation. And we continue to expect 75 basis points of further rate cuts this year in March, July and September. I'm pleased to say Andrew joins us now. He's chief economist at Citi and he's in studio. Have to start with this Amazon story, because 16,000 jobs, we continue to get these layoff announcements. Obviously, each layoff announcement is idiosyncratic to that company, but you're obviously a little concerned about labour market weakening.
Yeah, that's exactly what we're trying to assess. You have these individual stories from firms. The question is, does this become an aggregate trend, a macroeconomic dynamic? And what we've seen is that this is a labour market that's been stable because firing has been low, layoffs have been low, hiring has also been low. That's always a little bit uncomfortable because if those layoffs do start to pick up, then the unemployment rate can rise very quickly. Now, that hasn't happened. We've been in this low hiring, low firing scenario for quite a while now. We had some of these layoff announcements back in October. We watch initial jobless claims for unemployment insurance every week. Those haven't gone up. So there's no sign yet that we really have a macro trend towards higher layoffs. But I think every time we get an announcement like this, it reminds us to be mindful of that.
Well, and as Paul Donovan of UBS was pointing out today, it's not just the actual labour market, it's the perception of whether, I might be unemployed in the future and will that stop me from dipping into my savings to pay for those tariffs, as he says. So why not an insurance cut today from the Fed?
I think they will get to cuts, and I think to the point that was being made about people's perception of the labor market, you look at the survey data and you ask people, are jobs plentiful, are they hard to get? What we see is that over time, that number of individuals who see jobs as hard to get keeps increasing. So we're watching those kind of numbers, and whether it's right or wrong, whether that perception of the labor market is correct or not, if the perception is that the labor market is loosening, that does mean that people will adjust their consumption behavior. Now, you go back to the consumption data, that looks fine also, right? We've had strong retail sales. So these things aren't showing up yet, but I think they are all signs that policy rates are still probably modestly restrictive. Chair Powell today is going to tell us that they're in the range of neutral. But what he said back in December is maybe upper end of that range. So upper end of the range of neutral means that if we see any more concern in the labor market, the Fed will cut further.
Now, the market is pricing in around about 2 cuts this year. You see 3, the first one in March. If we're not going to get an insurance cut today, why would we get one in March, given that by then we won't even have had tax refunds really to speak of?
It really depends on what happens with the labor market data, and when exactly those cuts are delivered is just going to depend on that. So I think on inflation, we've had all kinds of distortions in the data because of the government shutdown. Hopefully we're not going to get another government shutdown and have more distortions. And that means that the Fed right now is really focused on the labor market story. The unemployment rate moved down to 4.4% in the last month's data for December. It looks relatively stable over the last few months. As long as the unemployment rate is stable, I think this is a Fed that will feel comfortable just holding rates steady. What we have in our forecast is that the unemployment rate will at least gradually move higher. That's not because layoffs pick up in our base case. It's just because we have this really slow pace of hiring. You look at the payrolls data, it's been a pretty tepid rate at which firms are adding new jobs. So that leads to a rise in the unemployment rate. That leads the Fed to cut. It all depends on that labor market data.
I have to ask you about President Trump's comments on the dollar and its weakness. Casual, almost throwaway, don't care if it goes down, it'll yo-yo around. Could he do some real damage? I mean, sure, it would be nice for exports to be more attractive, right? I'm sure that's what he's concentrating on. But what damage might it do to the real economy if it continues to weaken?
Whenever you get a weaker dollar, you worry about inflation picking up. Now, I think the good news is that the trend in inflation is towards softer inflation. The last couple months of goods inflation, where you would expect to see those dollar effects show up, has actually been softer in terms of goods inflation. So there's a positive trend or an encouraging trend for Fed officials as we're looking for inflation to get back towards 2%. The other thing that a weaker dollar does is it actually makes U.S. exports more competitive. So there's always kind of two sides to this. It depends. Are you an importer? Are you an exporter? Are you worried about inflation? Are you worried about activity? On the activity side, there's actually a case to be made that this can boost export activity.
Sure, but if there's any volatility we've seen in the last few days, it's been in the currency space, what with the yen, tumbling, and then today, well, the dollar is stabilizing today, but in the last few hours, we saw that massive move. It was a 1.2% move. You can't just have those willy-nilly, can you?
Yeah, volatility is never a good thing for the economy. It's never a good thing for markets. I think that is something that we've had a number of policymakers comment on, and some of that volatility may be being driven by developments in the U.S. Some of that volatility being driven by developments outside the U.S. So I think that will stay a focus. It's encouraging to see things kind of stabilizing this morning.
Rick Rieder's odds have gone up to be the potential next Fed chair. Would he be somebody that would be more palatable to the bond market? I'm
not surprised to see his odds rising in some of the prediction markets. if you think about the comments that President Trump has made, he's talked a lot about wanting somebody like Treasury Secretary Bessent. Treasury Secretary Bessent has a background in finance, in financial markets. I think that has at times been encouraging and comforting for financial markets, that someone with that experience is in that role. Rick Rieder would be somebody like Bessent with that kind of background in financial markets.
And also potentially more of a consensus builder, a very affable person and so on. So that would play into the decision, no doubt, as well. That said, would it be without a doubt a more dovish Fed if it was Rick Rieder to be Fed chair?
Well, I think we've heard President Trump be very clear about his view on rates, and he was just talking about this yesterday and saying that he thinks that rates should be lower. If you look at the FOMC dot plot, the summary of economic projections, you actually have the median Fed official who thinks that rates should be lower. And so we're very likely to get a Fed chair who thinks that rates should be lower. So I think that is the direction of travel. Markets are going to try to tease out, exactly how dovish different Fed chair nominees are. As we've seen those odds move around, those probabilities move around, we actually haven't seen huge moves in the market. So the market isn't perceiving a huge difference between these various different potential Fed chair nominees.
Most important question for the Fed chair today?
Most important question for the Fed chair today, I think, is what would it take to get to that next rate cut? That's what the market's looking for.
I'm sure that'll be the very first question. Andrew, thank you so much for coming in to join us this Fed Day. Andrew Hollenhorst of Citi. Now to other top stories trending on the terminal this morning. A blowout quarter for ASML. Fourth quarter orders far exceeded analyst estimates, driven by demand for its most sophisticated chip-making equipment. Bookings were at a record $15.8 billion. ASML counts all the leading chip makers such as TSMC and Intel as customers. Tether Holdings has become one of the biggest players in the global gold market with a hoard of around 140 tons of gold, worth about $24 billion. In an interview with Bloomberg, CEO Paolo Adrino said that they plan to keep plowing enormous profits into gold, while also beginning to compete with banks in trading the metal. And Apple CEO Tim Cook is the latest executive to weigh in on the killing of ICU nurse Alex Preddy by federal agents in Minneapolis. Cook called for calm, saying, quote, "This is a time for de-escalation and that America is strongest when everyone is treated with dignity and respect." In an internal memo, Cook added that he discussed the matter with President Trump earlier this week. Coming up, refocusing on the economy, President Trump rallies supporters in Iowa to bring his affordability push back into the spotlight. This is Bloomberg.
I could create the greatest unemployment numbers or employment numbers ever. All I have to do is hire 3 million people and put them into the federal government, and you have 10 people, for one job.
President Trump looking to bring the focus back to his affordability push at a rally in Iowa. Let's head to Washington now with Kate Ackley of Bloomberg Government. So this has been ongoing for several weeks, but obviously if we have a partial shutdown, it's not going to look very good. Kate, what are the chances?
Right. Well, and when there is a partial shutdown, depending on which agencies and departments are affected, it has an impact on the economy. I talked with people yesterday, for example, who, represent the airline industry, and they're worried about, if TSA is operating again, people are operating without their paychecks. There are economic ripples that can come from this. And I know there are ongoing discussions on Capitol Hill and with the administration to try to avoid a partial government shutdown, this weekend. But these are some really thorny issues after the sort of tragic events over this past weekend.
Yeah, absolutely. And speaking of those tragic events, it does seem there's an about shift at the administration, but how much of an about face is there? How much de-escalation are we seeing?
Well, this is a real change in strategy, and maybe nobody has been, President Trump hasn't fired anybody, but he's moved his border czar, Tom Homan, to kind of be in charge of the situation now with in Minneapolis. And we saw yesterday, this is notable, on Capitol Hill, 2 Republican senators, Lisa Murkowski and Tom Tillis, saying, both Republicans saying that they thought that Homeland Security Secretary Kristi Noem should lose her position.
Yeah, Trump asked about that yesterday. He just said no, that she will not be stepping down. We'll see how things evolve. Meanwhile, Marco Rubio is saying the U.S. can use force to ensure cooperation on the part of Venezuela. Is Venezuela going to be back in the narrative next week?
Well, he's going to be on Capitol Hill. This will be the first time he'll be at the Senate Foreign Relations Committee. This will be the first time that senators will have the opportunity to, grill him or ask him tough questions or try to learn more about the administration's plans in Venezuela, since that sort of New Year's, military action where they brought Maduro to the United States to face charges here. And, this is something that the big oil and everybody in the oil and gas industry that's kind of looking, some of them maybe skeptically about going in and putting down billions and billions of dollars to rebuild the country's, infrastructure, the oil and gas infrastructure there. They're going to be looking for clues. What does Secretary of State Rubio say? We expect that, Democrats, not surprisingly, are going to be offering the tough questions and, raising the biggest concerns. But, we'll also be looking for what do the Republicans on the committee say? What do they want to know?
Yes.
And of course, Rubio will be in the spotlight.
All right, Kate will be keeping an eye out. Kate Ackley there of Bloomberg Government in Washington. Turning to tech, earnings expected from Microsoft, Meta, IBM and Tesla after the market close. It's the busiest day for earnings. We have $8.9 trillion in market cap set to report. Joining us now is Mandeep Singh of Bloomberg Intelligence. Well, we should be off to a great start after ASML orders blew away estimates, Mandeep. But what about the companies reporting today? Are there going to be any duds?
Well, I don't expect, Microsoft or Meta to be a dud. The real question is, how much is the market willing to kind of give a pass to Meta when it comes to their AI spend? And the reason I say that is everyone is painting a picture that AI assistance would be a big market, and Meta wants to compete in that with their superintelligence unit. But so far, they are the weakest when it comes to showing the monetization from their, AI spend. And that's where I feel I'm interested in seeing the market reaction. Microsoft, on the other hand, has been upfront in terms of showing the AI contribution to their Azure growth. And so from that perspective, given their OpenAI relationship is going to last at least for the next 5 years, they should be fine. And really, their cloud business, which grew 40%, should probably accelerate this quarter.
All right. Yeah, Meta really has done nothing. If you look at its performance over the last 12 months, it's in line with market performance since the beginning of the year, but it's really gone nowhere. We'll see what happens with investors today. I want to ask you about the Amazon news, because we did indeed get confirmation that Amazon is cutting 16,000 jobs. An email that went out in error was actually uploaded today, and, Amazon says it's going to help its US employees with 90 days for finding other jobs and so on. But what does this mean? 16,000 seems to be a large figure.
It is. And look, revenue per employee will be a big metric for all these hyperscalers going forward. In the case of Amazon, they are still the largest public cloud provider. The question that investors will ask them is, how will they retrofit their existing, IT infrastructure to pivot towards AI? And that will be a big change, even though they have the cloud share. Like, there are a lot of neoclouds that are playing in the AI infrastructure right now. So I think they have to do that efficiently. They have their own chips, but clearly they are trailing when it comes to the likes of Google GPUs. And that's where I feel the streamlining of operations is probably the first step. But they have to protect their cloud share, because clearly there is more competition on the AI infrastructure side.
Yeah, and I do want to point out these 16,000 positions are corporate employees, so it's obviously changing the bureaucracy of Amazon to some extent. Now, when it comes to AI, SoftBank is going to invest even more now in OpenAI, another $30 billion. Is Masayoshi Son getting carried away, or is he doing something with a lot of foresight, Mandeep?
My guess is this is part of the Project Stargate initiative. And look, they had to sell their NVIDIA stake in the past to invest in OpenAI. So that $30 billion number seems to be huge. And so I'm always interested in the source of funding. I mean, clearly he has raised a lot of money, but, AI overviews has been doing really well for Google. And when you look at OpenAI on the consumer side, that MAU growth seems to have slowed. So I'll be curious to see what is he really betting on in terms of OpenAI, because competition has increased from Anthropic and Google when it comes to OpenAI's leadership.
All right, Mandeep, thank you. Plenty of fuel for the AI fire, at least today. Mandeep Singh of Bloomberg Intelligence. Staying with earnings now, and Starbucks is set to release results before the bell. It's expected to report comp sales growing for a second straight time. Bloomberg's Jennifer Creary joins us now. Jennifer, what should we watch?
Yeah, so top of investors' minds will really be whether Starbucks is showing signs of long-term profitability and margin recovery. And I think there are two things to highlight here. So the first is that key metric, comparable store sales. Now, the average analyst estimate puts that at 2% growth. As you mentioned, that would be the second consecutive quarter of growth for Starbucks. Certainly a welcome sign for investors after 6 consecutive quarters of decline. Now, notably, analysts are saying that much of that growth will come from the US domestic business. If you cast your mind back to the previous set of results, a lot of that came internationally, so certainly a point to watch. Secondly, I think investors will be concerned about whether or not CEO Brian Nichols announces further improvements to the customer experience. Now, he's made this a central part of his turnaround plan, but of course, those improvements come at a cost, right? And there's a lot of concern over whether or not they're being rolled out across stores as quickly as investors would otherwise hope. Now, hanging on all of this is a note of caution, and that is the long-term fiscal guidance. So if you remember when CEO Brian Nichols arrived at Starbucks about a year and a half ago, he removed that long-term guidance and withdrew targets. So investors are looking for signs that there's long-term profitability, but they won't have to wait long, because on Thursday, management has said that it will issue fiscal 2026 guidance. So potentially something to boost investor confidence going forward.
Yeah, Nico coming from Chipotle. Jennifer, thank you so much. We'll be watching out for all of that a little later on. That is Bloomberg's Jennifer Creary. Coming up, a big day for earnings, but also a Fed decision. Your day ahead next. This is Bloomberg. Now, a look at what's ahead today. So AT&T and Starbucks are reporting earnings before the bell. A lot of earnings today, though. Then the Fed's rate decision, of course, at 2 p.m. Eastern, followed by Fed Chair Powell's press conference at 2:30 p.m. Eastern. That'll be an interesting one. And then we get the big load of earnings. Meta, Microsoft, Tesla, IBM, all among companies set to report after the market close. Let's take a look at some pre-market movers. I want to start with Amazon, because indeed those jobs are getting cut. That email that went out in error, well, it was uploaded, and 16,000 jobs in Amazon's bureaucracy are going to get cut, according to the company. It will give some employees 90 days notice. Then we have ASML shares up 6%, record orders in the quarter, and it was just pure AI demand. It's fueling the AI bulls today. Seagate as well, extending a post-earnings rally by the 11% this morning after its forecast beat. And here is your macro picture this Fed day. We have S&P futures pointed higher, the dollar index stabilizing, and the 10-year yield at 4.24.